Okay, well, let's go ahead and get started. We've got a couple of housekeeping items I wanted to go through before we get started. First of all, I'm Allison Harrell. I'm a shareholder here at Thomas Howell Ferguson, and I lead the not-for-profit group. And I have talked with a lot of you, probably that are on the phone or on the webinar, and also some of our clients that have had a lot of questions about the FEMA reimbursement process for the COVID-19 pandemic. So I thought it would be a great idea for us to get together and have these conversations and get some of our questions answered. So I thought I'd bring in our friend Joe Myers from Disaster Strategies and Ideas to give us an update and answer some of those questions. I've also invited Steve Stevens from our Thomas Howell Ferguson governmental consulting team to join us to answer some more technical questions that you may have. We know this has been a frustrating time. It's been a strange time. I don't think any of us thought we would ever live through anything like this. And it's frustrating to hear about all the options out there, but yet not have all the answers to the questions about what could be applicable to your entity. So I hope that you walk away with some hope that there are a lot of resources and that there's a lot of help out there to get you through this. And I'd like to encourage you to try and sit back and don't think that this may not apply to you. It could, and the process will be a difficult one, or could be a difficult one, or it could be a simple one. But there are a lot of options out there. And besides the FEMA reimbursement process, there's a lot of options under the CARES Act. So we're going to mention some of those items about the CARES Act as well today. Before we get started, like I said, a couple of housekeeping items. Make sure that you've logged in to the GoToMeeting under your email address. And I say that because if you ask any questions during the webinar, we want to make sure that we're able to communicate back with you. So you will see at the top of your screen that there's a chat feature. It looks like a little bubble. We're pointing to it right now. And that chat feature is where you can enter in all of your questions. We may not be able to answer your questions during our webinar today just because of the timing and how much time we want to take up of your morning this morning, but we will get back to you on those questions. So it's very important that you make sure that you log in those questions. Also, at the top of your screen, you have the option to view the speaker as well as the presentation. So make sure that you can click on that where it says view everyone. You can see the presentation as well as the speaker. And the speaker will always come from this THF CPA box, as all three of us are in the same room together, but socially distancing, so you won't see us on the camera at the same time. So I think that's it. And now I want to tell you a little bit about some of our speakers today. And again, I'm Allison Harrell. I lead the not-for-profit group, so I oversee all of the audit and tax work that our firm does for all not-for-profits. And I've been doing that for longer than I care to admit, but close to 20 years now. So been doing it a long time and have dedicated the majority of my career to helping not-for-profits. So our first speaker today is Joe Myers, and he has served as the director of the Division of Emergency Management for both North Carolina and the state of Florida. Between the two states, he held the position for over 15 years and has been involved with disaster services for over 40 years. So very qualified to answer a lot of our questions here today. As the director of DEM in Florida, he was responsible for the response plan after Hurricane Andrew. Through the years, Joe has served in many roles in disaster services. He's the only person to have served as the president of the National Emergency Management Association twice. I can without a doubt say that there's no one who knows more about disaster services and emergency management than Joe, and I'm thankful to have him join us here today. Also joining, as I said earlier, is Steve Stevens, and he is a CPA here with Thomas Howell Ferguson and a director for our governmental consulting team. Although he's in public accounting now, he has worked in the accounting division at the local government level, having served as the CFO for the Escambia County Sheriff's Office and as the budget director for Escambia County. So Steve leads our governmental consulting team, which includes all of our work in disaster services and public assistance. So those are our speakers today. And now I'm going to turn it over to Joe to get our discussion started.
Good morning. Thank you, Allison. And good morning to everyone. Today, we're going to try to help you out, try to understand a very difficult subject and a different type subject. It's the first time we've ever had to really deal with a pandemic and relate it to different FEMA programs and other programs that are out there. So this morning, as Allison said, we're going to try to help you with some ideas on your FEMA reimbursement for COVID-19 for private nonprofit organizations. And the way we're going to try to do that today is accomplish it by trying to answer some of the 5 questions that you see before you. I'll try to do the first 3, and Steve will do questions 4 and 5. So I think it's important that you understand the FEMA Public Assistance Recovery Program, because that's what the FEMA PA program comes out of. What laws and authorities are going to drive these programs, and what are the differences between the FEMA PA and the CARES Act. And then Steve's going to get right into the meat and potatoes of it. What are the eligible expenditures, and what steps do I need to take to initiate this effort? So we'll go ahead and get started. Next slide. I think it's important to understand a little bit about FEMA. FEMA is really a 4-phase program of preparing for, responding to, recovering from, and mitigating for future events. But today, we're going to totally focus on that 3rd one, recovery. But that's our whole effort will be on that today. So it's the 4 phases, but today will be recovery. Next slide. And during major disasters, the state, which is the grantee from FEMA, and the local governments and private nonprofits, which are the subgrantees, are eligible to apply for government assistance through the Public Assistance Program under the Robert T. Stafford Act for Infrastructure and Protective Action Cost. So that's where we'll be going today. There are 7 categories that create the Stafford Act under infrastructure, but we're only going to be talking about one of them today. Next slide. Now, these are the typical threats or events that trigger a FEMA Stafford Act declaration. But this is we've had to add something new to fit here is COVID-19, because I'm only going to hear me say it several times. It is not normal. This is not your typical type of disaster situation. So those are normally the threats that one would face. Next slide. So our focus will be on COVID. I think it's important that you know the laws that govern these programs. The state's going to be heavily involved. If you're a private nonprofit, you've never gone through the FEMA situation. Chapter 2, Florida Statute 252 is what drives the emergency management program for state and local governments. And then you've heard the governor does an executive order, or there's been a local state of emergency declared. Those are the 2 tools that implement 252. And 252 lays out the authorities of the state and the authorities of local governments. Now, the Stafford Act is what drives the FEMA Public Assistance Program. And I'll tell you a little bit of story about the Stafford Act. It really shouldn't be called the Robert T. Stafford Act. It should be called the Ridge Law. And I'll tell you why. And in the introduction, I was president of NEMA for twice, and no one really paid any attention much to emergency management back in the day. And the very first congressman to show any interest in our program was Tom Ridge from Pennsylvania, who was a victim, his area between Pennsylvania, New York, and Ohio was hit by these massive tornadoes. And so he took it on to try to figure out why his people, his constituents, couldn't get more disaster assistance. So he engaged himself with the National Emergency Management Association, and he was successful in getting a rewrite of the disaster law, which was the Stafford Act. As I said, it should be called the Ridge Law. The reason it's called the Stafford Act, that Congressman Stafford held it hostage until it was named after him. So, it just shows you how it goes. But it's really been the great thing to get the Robert T. Stafford Act out there. Now, to complement these other rules and laws is the CARES Act, which came in with the COVID. So that's the ones you need to really focus on right there. And the CARES Act, brought you the PPP, PPE programs, your personal protection equipment, and the Paycheck Protection Program. So we'll hit on all those a little bit today. Next slide. It's important, whereas in the CARES Act, you just went directly to the financial institute. But it's a little bit different when you're dealing with the FEMA situation. There's really 3 people in charge during a FEMA presidential disaster. That's the people at the courthouse, the chairman of the county board of commissioners, the person at the state house, the governor, and the person at the White House, the president. That's the 3 people in this country that are in charge of a disaster declaration. And there is a process to go through that. Next slide here. And obviously, they have delegated this authority to 3 people: the local emergency management director, the state emergency management director, and the FEMA director. So each level of government has a specific role and responsibilities to carry out the implementation of a disaster declaration. So like I said, there's a process to follow, and you want to try to stay within the lines on it so you can move your grant quicker. Next slide. Now, let's get into what are the differences between FEMA PA Recovery Program and the CARES Act. Next slide. As I said earlier, most disasters give you these consequences. It does not matter. If you think back to war, some people call emergency management war with no bullets. And that's one way to look at it, the COVID. Everybody talking about the war, but it's a war with no bullets. But if you go back, say, all the way to Baghdad, back to the wars back in the Iraqi war, what was the consequences? People were isolated, displaced, infrastructure damaged or destroyed. Katrina, go back to New Orleans, those that remember that. The same consequences. But do those really fit COVID? It's different. It's entirely different. It's not normal. Next slide. As I said earlier, there were 7 categories in the FEMA program, but we're going to focus on protective actions, category B. You have debris, you have all the other types of things. If you have damage to your infrastructure and people isolated, displaced, category C through G are what covers that. But our total focus on this is going to be on category B. Now, if you had a hurricane, you would want to go beyond that. Next slide. Now, try to break this down to give you an idea of the differences. I'm going to cover the FEMA PA and the CARES Act, and Allison's going to come in and talk about retention credit. But let's look at these things. COVID-19 under FEMA is limited to protective action. CARES is limited to retention of employees and supplies. I know that they've increased the percentages. I think it's up to 60% now for the employees and 40% for supplies. To qualify for FEMA, you got to be either emergency essential private nonprofit or a non-emergency essential private nonprofit. And there is hundreds of categories and lists of people that would qualify for this. Now, for the CARES Act, you're either a private nonprofit or a business. And the businesses are really not qualified under the FEMA PA program. So we're really talking government and private nonprofits. Now, another difference is that FEMA is a grant program. There's no limit on the amount, where the CARES Act is a loan. And there is a limit because you've asked for X amount of money on this loan. The grant program has no closing time right now, the FEMA. In other words, the incident, and I'll follow up with that, the incident is still open. Whereas in the CARES Act, it runs from March to December. And there's certain deadlines you must meet. You must get your documentation in order to get forgiveness on the loan. Where FEMA is a grant. FEMA, you deal with government, and with CARES, you go to the bank. With FEMA, there is administrative costs is allowed. With CARES, there's not. And of course, the FEMA is administered by the state. As I said earlier, CARES is administered by the bank. So you can see both are good programs, and you're going to need both of them. And I'll show you in a minute how I believe you will be able to utilize those. But let me get Allison back up here and talk about a third program, which is the Employee Retention Credit Program.
Thank you, Joe. I just wanted to mention real quickly, I think everybody is aware of the PPP funding, and that's been definitely the biggest item in all of the headlines and in everybody's inboxes about the PPP funding and how that's working. And that is under the CARES Act, but there's another item under the CARES Act, which is the Employee Retention Credit. The Employee Retention Credit, why I want to mention that to you right now, is for organizations that did not get the PPP funding. So either if you weren't eligible for the PPP funding or if you did not apply for it, you are eligible for the Employee Retention Credit, and that will be coming due for the second quarter of payroll for 2020. So coming up on June 30th, after June 30th, when you're filing your second quarter 941, is when you take the Employee Retention Credit, and that is up to $5,000 per employee that you get a credit for your payroll taxes. And there was some confusion at first just because it's an income tax credit. And for nonprofits, which all of you guys on the phone are nonprofits, you don't ordinarily pay income tax. Some of you guys might pay income tax on some of your unrelated business income, but for the most part you don't. So there are some questions there, but they did alter or amend the 941 to account for that, as well as put another form out there. The IRS did form 7200 for you can apply for the advance, but that is for organizations that did not receive PPP funding or were not eligible. So C4, C6s that were not eligible for the PPP funding can get the Employee Retention Credit. There is a very long blog on our website that I'd like you to direct you to. It gives you all of the instructions and ins and outs. And if after reading that you have further questions, please don't hesitate to reach out to one of us here. And of course, we'll give you our contact information at the end. But there are some questions about that. So if you do, please reach out to us. But for the most part, your payroll companies can also help you if you're outsourcing your payroll. But wanted to make everybody aware of that because that will be coming up soon for the second quarter ending June 30th, 2020. So I'll hand it back over to Joe.
Thank you, Allison. I mentioned previously about the incident period. And this is right here is I think is probably the most important thing today from my standpoint, helping you understand the two programs. As I said earlier, the PPP starts in March. and runs through December. You can see it on the graph from March to December. And that's when you have that certain amount of time, your certain amount of money, and you know it's going to go towards your payroll, retention, and some plot supplies. But FEMA starts back in January. So those expenses from January to March could be eligible under FEMA. Very well could be. And I would take that March to December, look at my CARES Act eligibility, then I'll sort of overlay the FEMA eligibility and see what did I miss. There may be something else out there that you didn't get asked for. And as I said, the incident period is still ongoing because the event is still happening. Go beyond December. Start projecting out what you think your cost could be. So there is definitely an advantage to use both programs. And one's going to be a government program run through FEMA, the other one will be the loan program through the banks. So my next slide here will sort of sum up my part before I turn it to Steve, is use your FEMA for time periods not covered, what I just said. It's an ongoing event, plan beyond the PPP eligibility date. And giving, a lot of people in your experience with FEMA, it's been maybe it takes a while to get the money and so forth. This is not normal. They're moving things faster at a rapid pace. As an example, DEM, who is the grantee, is also an applicant. And just from March 13th through April 30th, they've already received $252 million under this program. So now's the time to go forward and to explain eligible items and how to get started. I'll turn it over to Steve Stevens. Steve.
Good morning. I am Steve Stevens. As Allison had mentioned, I am a director with Thomas Howell Ferguson, and I am a CPA, and I have performed lots of audits, but right now we are into the government consulting area. We have a lot of experience not only dealing with disasters, disaster recovery, but also what I think is near and dear to everyone's heart, disaster reimbursement. So, number one, our slide, the specific eligible expenses under the public assistance program. So let's think about this for a second. What is our goal here? And this is what we try to focus on. We want to maximize our reimbursement, but we also want to minimize any future disallowances or what we call clawbacks from FEMA after the fact. So everyone loves FEMA to begin with because they come in, they help you out, and there's money flowing, and it's helping you with your cash flow. 5 or 6 years down the road, they're going to come in and say, okay, where's the documentation? Where's the proof of payment? Where's this and where's that? And if you don't have it, then they're going to request those funds back. So we're going to talk about force account labor, force account equipment, supplies, and also contracts. Right after that, we'll discuss a little bit about direct admin costs, but I think what's key under every one of these areas is to maintain adequate documentation. So we talked a little bit, and we have capitalized public assistance program. So where does this come from? Joe mentioned several laws, including the Stafford Act, but I've got, I use a cheat sheet from FEMA, and it's actually as big as an encyclopedia if you print it out. But it is called the Public Assistance Program and Policy Guide. Now, when you're involved in the FEMA reimbursement process, you run into several acronyms. Joe spoke briefly about DEM. DEM is the Florida Division of Emergency Management. That division falls under the governor's office, and the COVID-19 public assistance funds flow through the Division of Emergency Management. In order to receive those funds, you have to request through an application process those funds, and you have to provide documentation for it. I'm shifting out of bounds a little bit here. Please remember the Papa G, the Public Assistance Program and Policy Guide. That's where the FEMA rules are. In addition to that Papa G is what we call the Uniform Guidance, and that is 2 CFR 200 and the attachments to 2 CFR 200. 2 CFR 200 includes all the federal regulations combined into this uniform super circular from the prior Office of Management and Budget, OMB circulars. So please read 2 CFR 200 and please read the Papa G to determine eligibility. It's very important, and we'll dive a little bit more into that as I push forward. Some of the, and I spoke briefly about some of the FEMA coming in, the FEMA auditors after the fact and everything else. Some of the common findings when they do try and claw back funds include improper contracting, unsupported costs, poor project accounting, duplication of benefits, including not disclosing insurance proceeds. So that's a key thing. The next key thing, which flows out of 2 CFR 200, and it's a significant difference from the old OMB circulars coming into 2 CFR 200, is the requirement to have written policies and procedures. So please make sure you have a written emergency policy, a written procurement policy, and include contractual provisions that are required under 2 CFR 200 in all of your contracts. Now I'll dive into the slide. Force account labor. For emergency work, only overtime is eligible for budgeted employees. So when you say, okay, well, how do I do that and how do I document it? Well, you document it through your timesheet process, your timekeeping process, and your payments, your payroll. So please make sure that your employees and your team are submitting timesheets. That time shows the activities worked during the emergency event. Make sure that payroll cost is there, and also the benefits, because those are reimbursable. And again, for emergency purposes, overtime is the only allowable cost for budgeted employees. So please take a look at that. Please keep track of your overtime pay, those overtime benefits, and keep them together in those timesheets. Make sure that they're signed by a supervisor and that you can tell what activities were performed by this individual that are related to the emergency. And again, I know I sound like a broken record player, but the documentation of your costs, having that adequate documentation all the way through to the proof of payment is key to maintain and keep that federal reimbursement for those costs. Force account equipment. This is another eligible expense that you can be reimbursed, but please again, maintain you have adequate documentation. Well, Steve, what do you mean by that? Well, if I'm using a generator, I need to know what kind of generator it is, how long it ran, how much fuel I put in that generator, what days I ran the generator, and log that into an equipment log. And those logs, auditors, verification, documentation, they're going to go in and look at that, make sure you have that and that it exists. And then they're going to take ask for the invoices relating to fuel purchases and things of that nature to document the use of your equipment. Now, you may lease equipment, and that's also reimbursable. But please make sure, again, that you maintain that lease agreement as documentation, that you maintain any procurement documentation that you had to obtain that lease, and all of the invoices and proof of payments. Now, FEMA has equipment rate guides that you can use, and they're normally based on hourly rates. For some, it's vehicle use, and so that's mileage. But please maintain, please pay attention to it. Build this information into, and you see another acronym on this slide at the bottom of 2, and it's a COOP. Well, we're not talking about chicken coops. We're talking about continuity of operations. And continuity of operations is key. Just like planning, strategic planning for your nonprofit, after you do your strategic planning, you also need to have an operations plan in case of an emergency. You need to have that in writing, and you also need to include this continuity of operations plan in your written policies and procedures. A couple of things, and I know this is a lot of information to grasp, but please pay attention. As Joe mentioned, we are in primarily or only a Category B program for emergency protective measures. So that Category B includes, again, forced account labor, we talked about that. Forced account equipment, we talked briefly about that. Please make sure, and Joe mentioned the different dates, please understand the period of performance, because if you ask for reimbursement outside of the declaration dates, it's going to be denied. So please make sure you pay attention to the dates, you pay attention and ensure that you don't have duplication of benefits, know where your insurance proceeds are, know where any other funding sources are. You may have received funding from another federal entity, HHS, and there's several other cognizants that are sending out money related to COVID-19. You cannot duplicate those benefits. I apologize, I'm staring down to make sure I touched on some of these things. Signed timesheets, we mentioned that. Please make sure your procurements are competitively bid. And I won't dive too deep into this, but emergency procurements are allowed under emergency and exigent circumstances, but you have to document what those circumstances are, number one. And then number two, you still have to competitively bid the services out after the fact. Next slide, we're on to supplies. And supplies can come from many places. A lot of us are cleaning up. We're having to use, I'm not giving a plug here, but we're using Clorox wipes to wipe down tables and everything else. Those supplies are eligible for reimbursement. The Lysol, the disinfectants, the other things that we use for cleaning. Please make sure you keep those invoices and keep those proofs of payment, and you show it within your accounting system. Because as I mentioned before, one of the common findings is poor project accounting. So please, with your documentation, compile all this information in one area, one fund, one cost center, however you maintain your books. If you use inventory that you had on hand from a stock room, that is also reimbursable. But please maintain that documentation and whether that was pulled from a stock room and what that cost was of that item that you pulled from your stock room. In addition, and this is not on the slide here, but whenever you procure certain contracts, please make sure to follow 2 CFR 200 and include the contractual provisions in every contract that you use to procure services over the time of the declaration and the event. One of the other things that we need to pay attention to, there's a lot of administrative costs going into maintaining this documentation and keeping things moving. Please make sure that you track that administrative time, because if it's overtime, you can obtain reimbursement for that. So those direct administrative costs, and FEMA allows for that, but we need to make sure of that.
Can I ask a question that just came in?
Yes.
Would masks, gloves, and gowns count PPE as supplies for reimbursement?
Yes. Short answer, yes. So PPE, personal protective equipment, which would include masks, gloves, visors, gowns, all of the protective equipment. The visors that you see and I call them bank visors whenever people are coming in to visit with you, and now you've put up giant plastic things to protect your administrative team from meeting with the public. All of those supplies are reimbursable. So again, please pay attention to it. Please keep those invoices and make sure you maintain proof of payment. Next slide, please. We talked about maintaining documentation for direct administrative costs. Here's some examples. Please make sure the people that are putting together and filing your claims, that compilation of that information is reimbursable. But pay attention because it's overtime. If you have to hire staff to come in on a contract, that could be potentially 100% reimbursable. So if you have to hire some contract staff to come in, please, again, make sure you maintain that cost, keep the documentation for that cost, and request reimbursement. So next slide. So we kind of put the cart before the horse a little bit because we talked about what expenses are eligible. You say, Steve, why'd you jump into that without telling me whether or not I'm eligible to begin with? Well, we're going to jump into that right now. So DEM, again, in caps here, that is the Division of Emergency Management. So what steps do you take to initiate your application? And we use the terms applicant and subgrantee interchangeably. So as an applicant, you have to determine whether or not you're eligible. Well, Steve, where do we go to determine eligibility? How do I know if I'm eligible or not? We need to look at the Papa G. And the Papa G gives an outline, and it talks about eligible critical emergency services and eligible non-critical emergency services. And there's a detailed list that I'm not going to go through today, but there is a detailed list in the Papa G. And I'll stop. If there are ever any questions after this and you're reviewing your slides or your notes, please don't hesitate to contact us at Thomas Howell Ferguson, whether it's Allison or myself or Joe Myers. We may not know the answer right off the top of our head, but we'll find out and get you an answer if you have questions or problems. So once you've determined that you are an eligible critical or eligible non-critical service provider, that's when you need to go ahead and fill out the document. Again, another acronym, the RPA, and RPA is Request for Public Assistance, and we need to do that now, okay? I don't want anyone, any nonprofit that is eligible for reimbursement of funds to not try to be reimbursed for those eligible expenses. So the next bullet under the team duties is documentation, submit an RPA, and then the ongoing incident. We really have to pay attention to the declaration timelines and the period of performance. And Joe mentioned those times and paying attention to those dates. We really need to do that. One of the things I briefly touched on is having your continuity of operations plan, your written policies and procedures. Within that continuity of operations plan and your emergency policy, you should know who your team is. Who is my emergency team? And that team needs to be very focused, meet on a regular basis, and be ready for these events. And that includes submitting the RPA or contracting that out, preparing and compiling the documentation for that reimbursement process, and certainly making sure that they understand, that team understands, hey, did I get insurance proceeds over here? Did I get funds from HHS over here? And we cannot duplicate those benefits. So please pay attention to that. Yes, another question.
If we received HHS funding, then we're not eligible at all for FEMA reimbursement, correct?
That is not correct. If you received HHS funding for certain areas, but that did not cover all of your expenses, please prepare a FEMA reimbursement. So, and I'll say that one more time. If you did receive HHS funds or funds from another federal source, and those funds did not completely cover your costs during this event, then you are eligible for FEMA reimbursement. So please prepare and submit that request for public assistance. And I've shot down through this. The FEMA process is very tedious. Compiling the information is very tedious, and there is a significant workflow from your request for public assistance through DEM, the Division of Emergency Management, taking that subgrant agreement that they will issue to you, signing that subgrant agreement, preparing your documentation, and then working through that reimbursement process. Once you get paid, that's not the end. Once you're paid, you still have to maintain that documentation, and then you have to close out your grant. And that's, you guys are done with me. I'm sorry that you had to stick with me, and Becca's waving at me.
One more question.
Yes.
What about management costs?
Management costs are eligible as administrative costs. Please make sure that you track those costs. Please make sure that those costs are not duplicated in any indirect allocation plan or any indirect charges.
Another question, where do you find the RPA?
The request for public assistance, the RPA, is on DEM's website, Florida Division of Emergency Management.
We'll put a link on it.
And we will add a link to our website so that you have access to that. And again, I'm getting ready to turn it back over to Allison, but I do want to mention real quick, and I want to go down and really focus on 2 CFR 200. There are several topics within 2 CFR 200 that are very, very important. And again, written policies and procedures need to be, you need to have those. But 200.303 under 2 CFR 200, internal controls, 200.318 procurement, 200.319 competition, 200.403 allowability of costs. So please pay attention to that, and please, if you have any questions, don't hesitate to reach out to us. And we'll put those links on our website. Thank you, Becca. And Allison, thank y'all for being here.
Thanks, Steve. So I just wanted to wrap everything up and give our contact information for those that don't have it. So you'll see there on the screen my email address as well as Joe and Steve's. And so I think, but all of the presenters today answered a lot of questions that you guys have probably been thinking and you've been asking. And, it's, and I think the main point is that if you think that you are eligible for some of the FEMA funding, let's go ahead and ask the questions and go ahead and get the RPA submitted. As Steve was saying, we would hate for anybody who's eligible to miss out on this funding and not file the RPA. But if you have any questions and want to walk down, an analysis on whether or not you think you are going to be, or you are eligible for funding, let's go through those questions. Let's go through those questions together to make sure that we're both headed down that path. And there's a question, I think, here.
Question to file the deadline. Is there a deadline to file?
Is there a deadline to file the RPA? Right now, my understanding is no. And but that there could be a deadline set on it, but right now there is not a deadline for the RPA.
So what costs are reimbursed for hiring a contractor to help with this? Are there ways to?
And that's a great question. So the question is, are there costs, the cost to hire a contractor to help with the filing process of the claim, and are those reimbursable costs?
Yes.
And I'm going to look behind me to our experts, Steve and Joe, and those are reimbursable costs through FEMA. So that would be at no cost to your agency. Those would be costs that you'd be able to recoup from your FEMA reimbursement. All right, well, we are 1 minute over. So I want to go ahead and wrap things up. But again, here's our contact information. Please reach out to either myself, Joe, or Steve. If you have any questions, we'd be happy to answer those. And whether that's on the FEMA reimbursement process or anything under the CARES Act, including the PPP forgiveness, or also the employee retention credits, which I want to remind everybody, those are coming up for the second quarter 941 payroll return. All right, great. And thank you guys for attending today.